All right, today we are digging into one of the most interesting earnings reports this season, and that's Rigetti Computing. On the surface, their Q2 results look like a big miss, but the way the market reacted, well, that tells a completely different story. So what is actually going on with this company? Let's get into it.
So here's the paradox in a nutshell. On one hand, you've got the financials, and they're not pretty. A clear miss. Earnings per share were off by 6 cents, and revenue just cratered, down almost 42% from last year. But then, on the other hand, look at the market's reaction. After a little dip, the stock just rallied, closing up over 6% on more than double its average trading volume. It's a total disconnect.
Right, so that's the big question, isn't it? What on earth are investors seeing that the headlines completely missed? That's the puzzle we're going to solve in this explainer, because the real story here goes way beyond those top-line numbers.
Here's how we're going to break it all down. First, we'll look at those tough financial numbers head-on. Then, we're going to uncover the two big reasons investors decided to look right past them. We're talking breakthrough tech and a mountain of cash. After that, we'll explore the long-term vision management laid out. And finally, I'll give you my take on what to watch for next and our official rating.
Okay, let's dive right into Section 1, the numbers. And look, there's just no way to sugarcoat this. These results were challenging.
I mean, just look at the scale of this underperformance. The revenue at $1.8 million didn't just miss estimates, it was down huge year over year. The loss per share came in at 13 cents. That's almost double what Wall Street was expecting. And the gross margin, wow, it absolutely collapsed, going from 64% last year all the way down to just 31%.
You know, that 41.9% drop in revenue is really the headline-grabbing number. Management pointed the finger at a delay in the reauthorization of the National Quantum Initiative, which is a key source of their government funding. And what this really tells you is just how dependent the company's near-term revenue is on these really big and sometimes unpredictable government contracts.
So, if the numbers were that bad, why on earth did investors look right past all of that red ink and buy the stock? Well, this is where the story gets really interesting.
It turns out investors basically threw the income statement out the window. Their focus shifted entirely to two other, much more important areas: some absolutely game-changing progress on the technology front and an enormous war chest of cash sitting on the balance sheet.
And the CEO, Dr. Sabod Sharma, he really set the tone on the earnings call. He highlighted the launch of their brand new Cepheus-136Q system, and he called it, quote, the industry's largest multi-chip quantum computer. Now, this wasn't just some marketing slogan. It was a huge validation of their entire strategy.
And this slide right here is the key to understanding how they're doing it. See, instead of trying to build one giant, impossibly complex chip, Rigetti's strategy is to perfect a smaller, 9-qubit building block, which they call a chiplet. And they nailed it. They achieved an incredible 99.5% fidelity, which is just a measure of how clean and error-free the calculations are. So now they can just tile these perfected chiplets together, kind of like Legos, to scale up, first to over 100 qubits and eventually to 1,000 or more. The bottom line for investors, this proves their scaling model actually works.
Okay, so that was reason number one for the rally. Reason number two? It's all about this number. Rigetti ended the quarter with over $500 million in cash and investments. And maybe even more importantly, they have zero debt. In an industry that just burns through cash on R&D, this is everything. It gives them a runway for years to execute their plan without having to worry about short-term revenue.
And they didn't just stumble into this cash. No, they built this war chest very deliberately. The biggest piece came from a $350 million at-the-market offering where they sold new shares over time. Plus, they got a strategic $35 million investment from their hardware partner, Quanta. This is the kind of financial firepower that makes their big tech ambitions credible.
All right, so they've got the tech proof of concept and they've got the cash. That brings us to Section 3, management's vision. With those two pieces in place, they were able to lay out a really clear long-term roadmap for everyone.
Now, the holy grail in this entire industry is something called quantum advantage. It's that magic moment when a quantum computer can finally solve a real-world problem that no classical supercomputer on the planet could ever hope to. But here's the thing about Rigetti. Unlike some of the rivals, they have a very specific 4-part definition for what that actually means. And here they are. These are the 4 pillars they're building towards. To claim true quantum advantage, they say a machine has to have over 1,000 qubits, hit that insane 99.9% fidelity mark, run operations faster than 50 nanoseconds, and have full error correction. See, this isn't some vague, fuzzy promise. It's a concrete engineering scorecard that investors can actually track.
And they even put a timeline on it. By the end of this year, they're aiming to hit that 100-plus qubit system milestone. Then, within 1 to 2 years, they plan to start implementing sophisticated error correction. And the big one, within 3 to 4 years, the goal is to check all 4 of those quantum advantage boxes. This is the multi-year journey that investors were buying into.
So let's wrap this all up in our final section, the next call. What should you be watching for, and what's our final take on the stock?
Here are our key predictions. First, and this is the most important one, forget about revenue for now. The stock price is going to continue to be driven by tech milestones, not financial performance. Second, a huge catalyst to watch for will be the rollout of their new system on Microsoft Azure, because that opens it up to a much wider audience. Third, on the next call, listen very closely for concrete progress updates on that 100-plus qubit system. And finally, you should expect their cash burn to stay right around $15 million a quarter.
So when you tie all of this together, we are initiating a rating of outperform. Look, while the near-term financials are undeniably weak, Rigetti has done a great job convincing the market that it has a credible and, more importantly, a fully funded plan to achieve true quantum advantage. Their validated scaling strategy combined with that massive runway of cash makes it a really compelling long-term story. The big question now is simple. Can they execute on this incredibly ambitious timeline?
This is not financial advice.